I was debating what to say last night. I didn't wind up doing a super follower video because I didn't think there was really that much to discuss. But I think we today gave us enough to talk about. I was thinking about doing this even tomorrow. All right, so let's just jump right into it. So a decent day on the markets, pretty decent rebound. I'd be a little careful with that Starbucks move here. I've seen this happen before when companies change their CEOs. The stock tends to rally pretty hard, and then it often comes back in when they kitchen sink the quarter. So my thinking on Starbucks is that it may continue a little bit more, but I would be a little leery, particularly if we come into the earnings. I know Nelson Peltz had been in this position, and he sold out. The channel high, if it does go a little higher, is 96.82. I mean, maybe they make a run for the $100 mark, but my guess is there'll be some sellers up there. I was looking, if you did a fib retracement from the most recent highs here on 11/16 up at 107.66 down to the lows that we saw on 7/16, 71.80. The 61.8 here is 93.96, so I think that's a good stop if you want to play long against that. Anything below that I think could sink back down. I don't know that we're going to fill the full gap, but it wouldn't surprise me to see a move down to at least the 84s to maybe 81s if there's a bit of a dip. So I would be a seller of that into strength. I think they took away the Chipotle CEO. That's sort of been a bit of a disaster post their earnings. They had initially popped up to 60. We talked about the after hours and an opportunity to sell into. The stock did plunge today, but it did rally back. I think you could use today's range as a gauge. If we were to get over high of day at 52.11 and hold, we'd probably fill up the gap to the 55.87. If we do keep dumping, the problem is that 2.618 is so close. I don't know that it would be support down here. You're looking at 46.57 and maybe even a move down to trend line at 44.66. I think it's cool if you want to do something like a 45-40 1/2 put ratio, playing for maybe some more downside and capturing it and then leaving off the 1-to-1. Let's say you do 1/2, so you'd buy 45, you'd sell 2 times 40. I think you have the opportunity there to close the 1-to-1, leave the overwrite on, wait for the bounce, and then take it off. We did similar trades in SPY. I posted that during the trading hours. We had closed those on the big dump last week and then took the opportunity today to take off the overwrite. The problem with the overwrite, though, is that the Vega component of the Greeks in the options pricing model gets very problematic on spikes of VIX to, let's say, 65 like we saw. So those lower strike overwrite puts do come under quite a lot of pressure, so the size is very key. We don't always get 60 VIX or 65 VIX, it's rare, but moves to the 35 or even 50 can and will happen, and I think that could be opportunity there. Particularly if you're not, let's say, in a trade or a big trade, I like the opportunity there to sell some out of the money puts. If you're going to buy a call spread for a move up, because I know a lot of people aren't so comfortable selling out of the money puts. By the way, you could do put spreads, sell a strike, buy a lower strike if you want to cap off your downside risk, tail risk there of some type of like market crash. I'm cool with that, but I think a lot of people make the mistake of just buying outright calls. And when you do just outright calls, and you have let's say a move up, it goes in your direction, the volatility component compresses so much that your trade can actually be a loser. So the way to get around that, in my experience, is to do some type of a spread, a call spread, because you get the volatility component compressing and you get the more pure play in terms of the price action there. I was looking at VIX and I was thinking to myself, today is sort of like the day the bears are going to have to really step it up, and they did not. I would be leery, though, if we were to get over, let's say, 1936. That was the big kind of breakout that we saw. And if we were to get over the high of day at 2079, we could constitute a higher low here. And we sort of are roughly on trend. If we do keep pulling back, there's a stacking of MAs, meaning you have a bunch of MAs stacked up right below us. Not really a very fancy term, but one I use often in a lot of videos, so I figured I would explain it. And you have between the 200 MA down at 1444 and the 50 MA at 1557, I think that zone would be a spot to reload, particularly if you want to go out to, let's say, October and buy Qs or SPY puts. Let's say you did a spread or even an overwrite. I'd be careful with the overwrite. You might want to add that on later because you'd have the lower IV. But in my experience, when you have one of these volatility shocks, IV does contract initially, but then you do get it spiked to at least a lower high. So I don't think we've missed the boat on terms of volatility pops. I often go by level to levels. People always like to discuss, their opinion of what they think the market could or should or would do. I just go by the levels. And I see today that we got the 2 times range of the inverted head and shoulders that we saw on the bottom a couple of days ago. And I see that 54.39 level is the 2x range. The 2.618 lines up with the Fed day high from 731, actually almost perfectly, up at 55.37 half and 55.38. So I believe there is a resistance zone between, let's say, it's really 55.0275 up to that 55.37 half. But I don't know that we're going to for sure get the full move. So I'd be starting to lighten up. Let's say we had an up open tomorrow, I'd be lightening up into the 5,500 level. Now, why would I be doing that? Often when we've been up in markets, we see profit taking into the weekend and vice versa. If we're down in the market, we can see sometimes short covering rallies on Friday. This sort of all started back in the day in the Gulf War, where they would have weak markets during the week. You'd have these sort of relief rallies on Friday and then ultimately go lower. But I'm sort of on board here that we could go push a little bit higher. But again, I think you could use now as a raise stop. This is really a dealer's choice discretionary play here. I used the pop into the close. I thought it was close enough to the gap fill and SPY, which we'll talk about in a minute, to book the profits there. So I think you could either use 55.39, 54.33 quarter. Today's VWAP, we did have a little bit of a rich close here at 54.27 half. So that needs to hold, by the way, on a dip. If that were to fail, I think there's risk of a larger liquidation break down to the 53.96s, maybe 53.59 quarter-ish. Qs are a little bit more iffy. We're up to the 8-1 bounce high. The 2 times range there is a little bit higher at 19,215 half. You have the 731 Fed day low at 19,310.75. And then I see a real stack of resistance where I'd probably even try right or right out short, at least for a rollback type of a scalp trade. Maybe if it becomes a swing, if it works, at between 19,648 to 19,848. That's the 731 Fed day high and the 612 Fed day high. It's interesting that they're very close there in terms of their price action. I think that if you want to have interim levels in there, not again assuming end ranges, you could add in some sell orders at 19,726 and 19,788. But let's not get the cart before the horse. If there is a pullback, I think VWAP obviously needs to hold at 18,934. Moving right along to the SPY and the Qs. Let's get that chart to pull up here. Now, my thinking today was that we were above the 20 MA. I didn't think there was enough time into the close to quite get the 8-1 gap fill to 543.01, and there's the 612 Fed day high there at 544.12. That lines up also with the 61.8 of the most recent range that we saw, of course, from the most recent high on 7/16 at 565.16 down to the 8.5 low at 510.27. So what now? My guess is if we do get an up open, I would be booking profits in between that 543.01 and 544.12 zone. I think that's a good spot. It's also the downtrend line and the 50 MA, so you have a stacking of technical levels there that I do think will be resistance. Now, what would be an acceptable pullback to me here if you're already long? I think the 20 MA here. I would not be long if it breaks, let's say, 540, because it's 540.09, so maybe a little bit of wiggle room. If that were to fail, I think we'd come down pretty much immediately to 537.71 to 536.89, and then we'd see that, of course, would be the 50% fib in our real breakdown level. If that can't hold, I do think we're getting a larger pullback, probably at least I would think to the 10 MA at 532.39. Then I'd be targeting the 100 MA at 530, and then we'd play a little wait and see down there. But yeah, I do think up opens here are probably opportunities to trim into. I think the Qs also have an opportunity here for a little bit of a trim. We're right almost into the 50% fib of the range that we saw, of course, from the 710 high down to the 8.5 low, 503.52 and 423.45 respectively. I think this zone here at 436.49. And then after that, I see there being some stacked resistance between the 50-day moving average at 472.54 and then the breakdown level as defined by the 624 low at 473.82. If you're not writing this down, you probably want to do so. There's also the 61.8 in there at 472.93, but it's hop, skip, and a jump there. Today's low is basically the 100 MA. I think if you're already long, 20 MA might be a little close at 462.58, but if we were to get a larger pullback that couldn't hold the 100 MA here at 456.44, I think it's a short, probably down to the 10 MA at 450, and then we'd see. If we do keep going, I do believe that 472.54 to 473.82 is the level to trim into. That's, like I said, the breakdown, the 61.8, and the most recent range high. So yeah, look for gap ups to book some gains into. If you want to put on some cheap put protection, let's say in the Qs, if we were to get up to, let's say, that 473, if you want to do, let's say, $10 out of the money, basically we think we stall, let's say, at the 61.8, you want to buy the 50% fib. So buy like 465, sell 450, maybe $15 wide. I'd be cool with that. If you want to do the override, something at or near the reference lows, probably I would undercut it maybe around 420 or lower. I think that would make a lot of sense to me with regard to that. I was looking at NVIDIA today. I was actually short some puts in that as well. I had done a ratio play. I covered some of it actually on 7:30, and then I covered the rest actually quite presciently on 8:6. We are technically a breakout today, a gap and go above the downtrend line and the 20 MA. So guess what? The 20 MA is the must hold at 111.50. The problem is it ran a lot already, and the 115.73 to 118.04 was really the breakdown zone. Remember, we had that $10 range above us at 118s to 128s. So my guess is a check back to the lower end of that range could find some sellers, and I'd be a profit taker into that. Again, we were close enough at the close that I thought it was prudent. Could we keep going here? I mean, sure, why not? The 50 MA is above us at 120. If you were to go mid-range there, I mean, I could make the argument we could get to 123s, but I just think some risk management here would be good. What I'd love tomorrow for a day trade or for at least a swing trade, maybe we get a dubstep situation here. Of course, that's the inside Harami, where we have a higher low tomorrow, and then you could take it up long over the two-day high of 116.23 and ride it. Or you could use the higher low from whatever the morning low or whatever tomorrow's low is as a stop and or short below that versus whatever tomorrow's, let's say, high of day is or necessarily close, assuming we have one of those doji type candles. We may not, but I'm just, putting that out there to be prepared for that if that scenario were to play out. I'm looking at Apple here. I think it's okay as long as we remain above this 220.20 to 218.62, basically the 20 MA and the reference high as defined by the 612 high. If we do keep going, the 224s to 225s, I think, are the next resistance. I think if we lose the 20 MA, though, and that would take you below low of day here at 218.62, I would think at least a 50 MA, probably 215.50, that area, maybe 213.50. That was the breakout over the 8.5 high. That could get a check back if that can't clear and hold. I was thinking a little bit about SMH generally also, because we love to see when that rallies ahead of NASDAQ, and it's sort of a little laggy here. It's above the 38.2 of the range as defined by the 711 high down to the 8.5 low. I think if you want to use 232.04 or 229.81 as a stop, I'm good with that. Above there, we are coming into a little bit of resistance here at the 20 MA at 235.40. The 100 MA is just above us at 238.24, but I'll assume as long as we're above the 38.2, we probably press on up to the 50% fib at 241.78. After that, it would be 251.52. So if you're already in it and let's say you have shares, I'm cool with selling some longer dated 250 calls against those shares. If you want to play for continued upside and let's say cap off some of your risk, let's just for argument's sake, say you have 100 shares of SMH, right? So you cap it, you're capping yourself out, right, at the 250. So you collect whatever that premium is. Let's say, for example, we were to go in SMH. I'm going to do this for you in real time. Let's say we go out to 10 days to expiration and we look at the 250s. I mean, I don't know that I would want to do this, but just theoretically speaking here, it's 173 by 198. Let's just say we went out to September expiration just for laughs, right? So we sold those for $7. So we'd have the 250 plus the $7, so 257. Okay, so I want to now still participate in some of the upside and reduce my risk, my deltas. So what's a good way to do that? You make it what's known as a synthetic butterfly. So you have your long shares, you have your short calls against it, and then you use some of the proceeds of the short calls to buy still higher calls. So when you get stopped out at that 250 or the 257 equivalent, you can still get a little bit of juice on the upside. So the call I'd probably buy at that point would be the 265 or 270s, because that's at the 78.6. If you want to be a little bit more daring playing for the gap fill, let's say you go longer dated, maybe past October, November election time, you could do something like the 273s. You can calendar it out, by the way. It doesn't have to be in the exact same series. I know that's a little bit more complicated, but if you do the diagonal calendar like that, you could always do selling the 250s in September, and then let's say we're going out to December for the Santa rally, and we could buy the 265s there for $10 75 cents by $10, 95 cents. So just in between there, whatever it winds up opening at the open tomorrow. I love doing plays like that. I think it maximizes your ability for theta burn and the contraction in the front strike, and then you still get the play on the upside with the other one. The ideal scenario, of course, would be if it were to stay below there, you capture that short dated premium, you're still long the longer dated premium, and then you could just do the play again by selling another upside call. I know it's sort of like a covered call type of play, but this is with a little bit of a kicker, let's say a booster with regard to the upper strike. Are there any questions here? For me so far, I feel like I'm just a motor mouth here. Nothing? I hope this is like showing the comments here. They've changed their format a little bit on X, so I'm not so sure if this is doing it the right way. Broadcast details. I mean, it looks pretty good. We got a good amount of people in here, but I'm not so sure if we're... no one has anything to type or say. I just have a feeling that this is all like piling up and my thing is not performing well. All right, I guess we'll keep going along. The ultimate risk on, risk off arbiter, of course, is Bitcoin. And I've been saying that I thought we had that look below and fail of the 53,635 level. It's bounced enough that we got to the 61.8 at 62,627, and now we're still above the 50% fib. So let's just say it's got to hold 60,000-ish. I mean, technically it's 60,095, but I mean, Bitcoin can move so quickly. I could also make the argument if you want to use candle body low at 59,402. If it does keep going, you have a stacking of MAs above us at 63,242, which is the 20 MA, all the way up to the 100 MA at 64,815. We've been doing this where we come down from channel high to channel low, back to channel high, channel low. I mean, if we do get back up to the channel high, I mean, you're looking at 67,454. So you could just layer out orders there and, of course, continue to raise stops along the way. I'm always good with that. I think a lot of people got nervous last week with the yen carry trade blowing up and, of course, interest rates coming down in a hurry. They have since continued to remain lower. We had a bit of a pullback. It held where it needed to. I told you in TLT it needed to hold 94.84 to 95.02. We are continuing to rally. I think as long as we're above the 10 MA, it's okay. 96.52. You know me with this stuff, guys. I like being long things that are above 10 and 20 MAs and or flat or short things below 10 and 20 MAs. I think as long as those hold on bounces, you can still play on the long side. But if they do continue to disappoint, it's probably not so great. And I think that saved a lot of momentum trades with us in the past. I mean, even just recent couple of years. The dollar is still pulling back, which I think is, I guess, a good sign for not so much if you're traveling to Europe. You'd probably want to do that in the summer when it was up at 106s. That seems to vacillate like every other year, but it does look a little bit weak. I'm curious to see if we have a higher low here. We are a little bit into the wick from the 8.5 low. I think if we get over high of day at 103.272, you could probably try long for a move up to 103.567, maybe even the 20 MA at 103.781, and then we'd see. I mean, if we could maybe get up to the 200 MA, 104.23, but it looks a little iffy to me here. I see we're below the 50% fib of the range, and I see we're also below channel low. So if we had bounced, and we did already, to the channel low and it rejected, dollar to me looks like it could be a little bit weak. So that could be interesting as well for the gold trade, which does seem to be heating up here. We're actually at the pennant high and most recent range high. I've said for a while, as long as it's above 225, it's fine, but now you got to, I think, raise a stop. I guess you could use low of day today at 227.59, but my guess is if it does open, it could gap through there. I would be looking for some type of a gap and go tomorrow. If we could clear the 229s, I think that could be interesting to me. If that were to clear, I mean, you're looking at maybe 239s in a hurry, maybe a quick $10. So keep that as an alert. That to me would also be the gap that no one's really expecting because we're up near the range high, and maybe traders are looking to sell because we're in a little bit more of a responsive as opposed to an initiative market. But gold sometimes does get its sea legs, and I always like to buy gold when it's uptrending. We're sort of just on the cusp of that here. So yeah, if we did get, let's say, a gap up tomorrow, I think you could use the opening 5 or 15 minute low as a stop and then play long. If we were to violate that, probably come right back down, and it would be a failure of the range high. And then, yeah, we maybe come back down to the 219s. So I think I'm going to cap it off there. We covered a lot of stuff. I'm going to start doing these a little bit more regularly, so you may want to set your alerts. I'll, of course, announce them. Today was a little bit delayed. I apologize. My phone actually died, and I was like about to start, and the battery was done, so I needed a little recharge there. But yeah, I think these videos are constructive. If anyone has any topics they want me to discuss in future ones, just message me. I'm going to keep a running sheet of them, and we'll address them in the next video. Cheers.